All right. I'm Stuart Berman of RSA Risk Management and Investigations. I want to thank you for inviting me to present this CLE today. The title of the presentation is Collecting Judgments, Finding the Hidden Assets. And what we're really working on here is attorneys working with a forensic accountant in order to find those hidden assets. Uh, a little bit about my background. I spent 25 years in law enforcement. I'm a retired federal agent. The name of the firm, RSA Risk Management, RSA is an acronym, stands for Retired Special Agents. I came from the U.S. General Services Administration, Office of the Inspector General. My business partner came from U.S. Secret Service, and we have 4 colleagues that came from the Internal Revenue Service, Criminal Investigations, and Revenue Divisions. So in terms of finding the money, that's precisely what we do. So let's talk about our agenda. And our agenda today is to see why people hide assets, how they hide assets, what are the traditional games that have been played in litigation to try and conceal ownership or assets, what databases exist out there to begin the asset searches, the data detective. That's a proprietary system that RSA uses, and I plan on giving you a brief description, kind of a primer on that today. Modern day vehicles for hiding assets, and most of them are digital vehicles or use the blockchain. And with technology, things are getting just a bit more complicated and require an extra effort to get there. And then the use of subpoenas. And while we work with attorneys all the time on this, we find that what we found is that our verbiage, our language that we use for subpoenas, help us flesh out what we need, what we're looking for to find those hidden assets. So we always encourage you to work closely with a forensic accountant because they know what they're looking for. All right. So why do people hide assets? And I think there's a lot of reasons. From creditors, from a spouse. We also do quite a bit of asset dissipation and marital law type work. From a business partner in bankruptcy. So bankruptcy I see is no different than marital law. You have a bankruptcy estate or a marital estate, and we see very much the same type of financial games played in both. Assets that were illegally obtained, laundering those assets, ill-gotten gains. People try and hide it from the government to obtain government assistance, such as Medicare. The reason why we're here today, to avoid paying judgments and for the purposes of money laundering. So let's talk about the traditional financial games. So anyone here who is going through this process will have seen some or all of these games. Running personal expenses through company disguised as business expenses. Now we see this quite a bit in marital law where someone will have a paramour and they will pay all those expenses out of the business. Paying a salary to non-existent employees. So we will see ghost payrolling to reduce assets. Paying salaries or fees to relatives or friends for services, then having it repaid after the matter. We see a lot of this. This is one form of what we call round tripping, where you try and remove your assets out of your accounts and have it go around where they eventually come back to you and end up back in your accounts. Over withholding income taxes or overpaying corporate tax to be refunded after the matter is finalized. Yes, we have seen this as well. especially in regards to business disputes or marital law. Create fake debt to friend or business colleague in order to reduce net asset value of a company. So with that, we usually have to do a company valuation and be able to trace the loans and the validity of such in order to see what they were trying to do with the net asset value. Holding off on new contracts or large jobs until the matter is finalized. Yes, we've seen this quite a bit, especially with those who serve as contractors or in the construction business, where they will put off the acceptance of a loan so as not to pay on a debt. So how do people go ahead and hide their assets? Well, in the grand scheme of things, they transfer money and they transfer to other people. They transfer to corporations, LLCs, limited partnerships, revocable trusts, irrevocable trusts, fake charities, foreign bank accounts, virtual currencies like cryptocurrencies. Here's our first question. True or false? Some people hide assets pre-judgment in anticipation of litigation. And if you said true, then you had this one correct. And we'll talk about one of these cases in just a little bit. All right, going back to how they hide their assets, prepaying expenses, prepaying taxes, prepaying credit cards. So we had a matter, and this one was a marital law matter, where one spouse ran credit balances on her credit cards of $1.3 million to hide the assets. Deferred salary, round tripping, which I discussed just a bit earlier. Round tripping is that process of moving assets out and having it come back to you. And one manner that we would see it is that if someone paid ABC Consulting, let's say $300,000 for consulting, so that money is moved out, and then ABC Consulting subcontracted with XYZ Consulting. ABC and XYZ are both owned by the debtor, of course. And then XYZ made a loan to our debtor's spouse in the amount of $300,000. And our debtor's spouse then deposited that in that spousal account. The purchase of antiques, purchasing jewelry, purchasing works of art, purchasing gold, silver, or collectibles, or now that we live in the digital age, you'll see the purchase of non-fungible tokens or other virtual assets. So our goal here is to then go and find the hidden assets. So we begin the process by developing a subject profile for each person. And then we prepare their financial profile. If possible, interview the subjects. In the last 8 years, in terms of us being able to interview the subjects, I've come up with 0. But if possible, that's something we'd certainly like to do. We're going to use some skip tracing methodologies initially to try and find where that person is and what they own. We'll use the search of public records and social media. You never want to underestimate the value of social media, whether you're using Facebook or Instagram or TikTok. On a matter we worked at, we had in Facebook, we had an individual who was our subject who had a couple different boats and 6 motorcycles. And we were able to identify millions of dollars in assets from those pictures they put on Facebook. So the search of social media and through traditional surveillance techniques. Starting the search. And this is something that I think basically every attorney starts at the very beginning with very, well-used websites such as Google and Bing and Yahoo, is quick. DuckDuckGo is also a great place, info.com. Let's move to polling question number 2. Again, true or false? A PI license might be required to search for hidden assets. So the answer for that is, for you as attorneys, no license is ever required. But acting as a forensic accountant, each state has different laws. And in a lot of states, if you are remunerated for the purpose of utilizing databases and conducting investigations on a person, whether you're a CPA or not, you must have a PI license. So if you are working with a forensic accountant and having him do this type of work, depending on the state, that forensic accountant might need to be licensed. Okay. So as I said, we want to start this building a profile, doing a background on our subject. So there are a lot of sources that we use, some of which are subscription database or one-time fee databases. Some of these are initially free. So websites like Instant Checkmate, Been Verified, Intellius, People Finders, Truth Finder, US Search, InfoTracer, Background Searcher, No, Spokeo, Go Look Up, People Looker, ID True, Check People, Background Report 360, Verispy, Locate Plus, Accurate. So the nice thing about these searches is that a lot of these will come back with person's potential date of birth, sometimes a partial social security number, with assets, real property, sometimes professional licenses, and actually even sometimes even arrest records. So in addition, it's important and a good jumping off place, not an end place, to use paid databases, subscription databases like LexisNexis, Accurate, NoX, Locate Plus, E-Verify, DelvePoint. We utilize DelvePoint, and which will come back with date of birth, full social security number. Let's see, real estate, vehicles, watercraft, purchase and sales of real estate, arrest records, places lived, apartments rented, neighbors, relatives, email, telephone numbers, utilize, email accounts, utilize, known associates. We can map out an associate tree. On to polling question number 3. True or false? Prepaying credit cards is one way to hide assets. Yes, it's become a little harder today. A lot of credit card companies, you have to go to and get permission from them to prepay and run a credit balance on that credit card. As I said, we had one matter where there was over $1.3 million over several different credit cards that had been prepaid. So that is something that we've seen in the field. So let's go ahead and start out with finding those hidden assets. We want to examine communications. As a forensic accountant, we want to examine bank and financial statements. And by financial statements, I mean bank, checking, brokerage, wealth management accounts, credit card accounts, business credit card accounts, life insurance, whole life insurance, annuity policies. We want to be able to examine tax returns. And in a perfect world, we would never, ever look at a tax return that was provided to us, through discovery. But we would only look at tax returns that come straight from the IRS. And only through ordering a transcript through the IRS do we ever receive a true copy. Review insurance policies, going through public records, which are rarely available, reviewing loan applications. So we're seeking to find bank accounts and financial assets, finding real property, finding personal property, especially those of high dollar value. We are going to do license plate searches because we want to find vehicles, VIN searches for vehicles, UCC filings, using social networks, verifying social security numbers, conducting lifestyle audits, which is something that we will speak quite a bit on. So in doing lifestyle audits, there are basically 4 methods we as forensic accountants utilize. Income probes. Doing an income probe audit, we are using all accounts that we are able to discover to find hidden sources of income. So outside of perhaps a W-2 income, we might be looking for real estate income from trading, income from loans, other sources of income which may not have been disclosed. Performing a cash T analysis. This is an old Internal Revenue Service analysis where you put together a full lifestyle analysis through the accounts where you show that the spending exceeds income. So another title for this is expenditures in excess of known sources of income. And by showing that, let's say expenditures were $320,000 a year and income was $120,000 a year, that there would be undisclosed or income that sources that were not divulged in order to meet those expenses. The net worth method, and that is another IRS technique where we calculate their net worth over a period of years, say 3 or 4 years, and we could show that the net worth is increasing while all the while expenses may be increasing or income is decreasing. So, again, matching that up to sources of income would clearly delineate that there has been undisclosed income, and now we have to work on detecting that. The bank deposit method. The bank deposit method is and we'll get to this in a second, is the flow of funds. Money in, and this is also another IRS technique known as source and application of funds. What are the source or the flow of the funds in? So at RSA, we use what we call the RSA data detective method. And what I've thrown up on this slide is activity from a bank account. Everything that's on here has been fully sanitized. What we do is once financial accounts have been discovered, and we're talking about checking, savings, now accounts, brokerage accounts, wealth management accounts, and credit card accounts. And what we do with this is we OCR the PDFs. That's optimal character recognition. And then we use a product that one of our retired IRS agents Ron Kreinbrook developed called RK scan. We could take that data and RK scan, which then recognizes the data and it drops it into a usable format. And in this case, you can see that it dropped it into a spreadsheet. And if we take a look at the spreadsheet, you'll see that across the top, we have the account number, the effective date, the posted date, a description as to the activity. If it was a check, we have the check number, which we can match, whether it was a debit or credit, and the amount and the effect on the balance. So we take this raw data and then we start to work with the data. We use pivot tables and we use filters to then work on the data. So one of the first things we want to do is identify hidden accounts for those transfers. So if you take a look here, you'll see under description, I've highlighted transcription, I've highlighted transfers, and I did both credits and debits for transfers. So in the credit, you could see a small transfer of $20, and it's a different bank than this account. So again, if you look at the account number that it was transferred from, this has just been sanitized, so it would have a different bank number on that. Now, if we go down, 6-7 lines, we will see transfers out. And we're looking at liquid money account or management account at First Nation Bank. And you can see quite a bit of money going out. So in terms of being able to issue subpoenas or further your debtor examination, this has already provided us a wealth of knowledge by just working with the data and going ahead and utilizing filters. So if we go back 1 second, let me go back 1 second. I'm going in the wrong direction. One of the things that we like to do, especially when we're trying to delineate all of the areas of fraudulent transfers, is to see where the spend occurred. Now, we would take a spreadsheet like this, and we would add in one column as to type. And in that type, we would identify exactly what type of spend it was. Entertainment spend, paramour spend, lifestyle spend, whether it was the type of spend geared towards removing money from the actual estate. So you could see that we took the previous spreadsheet, we identified the spend, and then I used a pivot table on this one to show the exact type of spend. This happens to be a marital case, a marital law case. If we look at 2019 and you look at the delineation of spend, clothing for paramour, $100,000, jewelry for paramour, $40,000, cash for paramour travel, over $61,000. Travel with paramour, paramour pet fees, dining with paramour, flowers and groceries, flowers, $877.82 on flowers. I would say that this individual was pretty romantic after all. Same thing, if you go to 2020, you see very much the same type of activity and non-bank money transfers, which wasn't in the previous one. But you can see how this was clearly delineated. And in this case, when I skipped, I compressed a couple of years, you could see that the money spent on the paramour in this account is almost it's $1,183,241.07, and that was between the years of 2018 and 2023. You also see that I list Paramore 1 because a little bit later on, we now have Paramore 2 and Paramore number 3. Moving on to the next polling question, true or false? Background checks are a good source of information. And I know everyone said true. Background checks are a wonderful source of information and a very good starting point. Again, but it's not the all end all. So what are the overlooked items? Loan applications, life insurance policies, property insurance policies. Loan applications. So this is something where we see in a lot of cases with subpoenas that were initially provided a loan history and a loan payment history. But we want to see the original loan applications, any subsequent loan applications, and any credit history that had been run on the subject. And that should always be in the initial subpoena. And why do we want to see that? Because on the loan applications, the borrower usually has to list other assets, other bank accounts, and their credit history, and sometimes even credit cards. So finding out about these other bank accounts, they may be accounts that have not been disclosed in the first place. So this is another place where we find quite a bit of assets that had not been disclosed. Life insurance policies. So we want the life insurance policy and the original application for that life insurance policy. So a lot of policies are whole life policies or variable life policies. And sometimes we see those policies, the cash value being funded by the debtor. So on something that might be like a variable life policy, we might see that they funded $100,000, $200,000, $300,000 to see the value, cash value of that life policy go up. And they can fund the policy without increasing the value of the life insurance. So again, we want the original application, the life insurance policy itself, and all the statements of value. Property insurance value policies. Again, we want to get property insurance policies for all properties. And if we know the insurance company, we can ask for the specific property, but we could also ask for properties, any properties not yet known. Often overlooked items, trusts, employment agreements. Sometimes we find extremely large bonuses in employment agreements, employer benefit packages, amended tax returns. As I said earlier, if we are not getting a transcript from the IRS, we are not looking at a true copy. Audit, review, and compilation reports, personal financial statements, getting what we can from a debtor CPA often proves to be a wealth of information. Tax preparation questionnaires. Annuities, much like the life insurance I just spoke about. Again, with annuities, we want the original account application, any credit record, that history that they ran, and the value of that to see if there's been additional funding. Contract, virtual currencies, which we'll get to in just a little bit. Employment histories truly help, especially if there's been additional or contracting type income. Professional licenses and certifications. And this is something that we see quite a bit when we are doing our background investigation, our profile. We might see that someone has a license. And if, as a regular check, we'll use Delve Point. But then if we're doing something in the state of Illinois, we'll go ahead and we'll run license checks with the IDF-PR. Okay. Trade names, patents, and copyrights. Virtual currencies. So we live in the digital age. The US government's agency FinCEN defined virtual currency as a medium of exchange that operates like a currency in some environments, but does not have all the attributes of real currency. In particular, virtual currency does not have the legal tender status in any jurisdiction. The IRS defines virtual currency as property, not as currency. So it's funny because the federal government has two different stances, especially on cryptocurrencies. The IRS is saying that this is property. So when looking at a tax return, we would be looking at a capital gain or capital loss. Yet the U.S. Securities and Exchange Commission has mandated that that virtual currencies and cryptocurrencies are in fact an investment. Cryptocurrencies. Bitcoin was the very first cryptocurrencies, were released in 2009. Now, as we take a look at the thousands of different types of crypto currencies and digital coins on the market today, the story behind cryptocurrencies is that it was developed by supposedly one individual to come up with something that could be paid between a group of people that was not a fiat currency. And it was meant to be something that would have value that people would agree on. It could be transferred easily and quickly through the use of computers and the use of helpful computers known as nodes throughout the world. And one of the greatest stories was the story of Laszlo Janusz, who had bought, I guess, in the very beginning, for a penny each, the equivalent of $1,000 worth of Bitcoin, right when it came out. And after holding it for a short period of time, weeks or months, he actually went to Domino's, a local Domino's, and ordered a couple of pizzas. And the manager there allowed him to pay what he owned, and I believe it was somewhere around 1,000 Bitcoin for two pizzas. And that the equivalent today would be worth somewhere around $390 million. So quite a bad investment hold for Janusz. All right, so let's talk about the different cryptocurrencies. Everyone knows about Bitcoin. They've heard about that, but you can see the chart here. There are several. Many of you probably heard of Binance or Shiba Inu. That's a very popular one. Crypto.com, very popular. Let's see, what else do we see a lot of here? Nexo is used quite a bit. So numerous of them. And in fact, as of 2023, there were 22,932 thousand cryptocurrencies. So how do we find cryptocurrencies? Well, you have to start out with a wallet. A cryptocurrency wallet stores digital currency and other digital assets. So a wallet is what stores the cryptocurrency, and then cryptocurrency leaves from there when you direct it. Most cryptocurrency wallets are software applications or hardware devices, but a crypto wallet can actually even be just a piece of paper because it's code. It's a 32-digit alphanumeric code. Your cryptocurrency holds a combination of public wallet address and a private security key. So as I said, the wallet address is a 32-digit code, and then there's a private security key, which is your password. And if you have a wallet with cryptocurrency and they're of value, and you lose or forget your own private security key, your password, you will never have access to that money ever again. If you want to invest in cryptocurrency or use any other blockchain-based service, you must have a cryptocurrency wallet. Cryptocurrency wallet stores digital currency and other digital assets, such as non-fungible tokens and digital real estate. Most cryptocurrency wallets are software applications or hardware devices. I already said this could be a piece of paper. Your cryptocurrency wallet holds a combination of public wallet address and the key. Yes. Let's talk about the next area of properties, which is non-fungible tokens. So non-fungible tokens are digital assets. There are certain attributes that can bring in certain benefits. You could have a digital painting. You could have a digital sculpture. You could have a digital piece of artwork, a digital signature from someone. So non-fungible tokens are limited in their supply. It is the scarcity of their supply that brings its value. While there's a possibility that NFT developers can have an unlimited supply of non-fungible tokens, they ensure that the supply is limited, so there's an ongoing interest. So when they're coding, it is how they set this up that makes it different from a cryptocurrency. So a non-fungible token is indivisible. You buy it in whole. Once there's a transfer, it can't go back. And they are unique. They usually have an item number. So if it's a piece of artwork and it's in tremendous demand, they are numbered and only so many are made of them. Okay, I talked about digital real estate. An alternate digital reality where users can go to work, participate in leisurely activities, and host digital identities. We're actually starting to see conferences, work type or organizational conferences held in the metaverse through digital real estate with digital rooms, conference centers, breakout rooms, and lectures. Combines elements of virtual and augmented reality to simulate real-life experiences. It's essentially the newest version of the internet. Okay, discovery. Because there are no middlemen required, like a bank, government entity, or wire transfer facility, the transfer and use of crypto, obtaining a paper trail can be difficult. The peer-to-peer trading concept of Bitcoin, although very easy for the user, proves extremely difficult for the purpose of identification. So what we do is we want to send a subpoena to one of the exchanges. Again, in order to use subpoenas for this, we are looking at litigation at this point, and we want to use usually the 5 top exchanges and draft subpoenas based on the individual's identifying numbers, alphanumeric identifiers. Email messages might provide a source of information as to exchanges used and completed transactions. Unfortunately, it's very, very difficult to get email to get email messages on this. We've worked marital law cases where husband and wives set up a joint email account before they got married, when they were going through that year before marriage and having showers and so forth and registries. And we were able to find transaction slips going back to this showing of trades. Okay. Bank and credit card statements may indicate payments to or from an exchange. So there's usually coding on a credit card or a bank statement in the description that may show something like one of the names of the currency exchanges, cryptocurrency exchanges. And if they are a US exchange, they're usually pretty good about responding to subpoenas. What I found is if they're an international or foreign cryptocurrency exchange, we're brushing up against something that's much more tedious and difficult. Tax returns. Cryptocurrencies are considered property per IRS Bulletin 2014-21, requiring the reporting of capital gains and losses. So we are going to go right to the tax returns to see if there were a capital gain or capital loss for trading cryptocurrencies. That should get us on the trail to start. Again, subpoenas directed at the top 5 exchanges. Accountant records, especially in net worth statements. Public blockchain. If you have a wallet address, a public address, the historical transactions based on those addresses are publicly accessible. We use a tool called Chainalysis, and we are able to look at everything and anything and everything on the blockchain. So the blockchain, the trades and the movement of a cryptocurrency from one address to another address is public. We could actually see where the money went, but we have to either have a destination address or a starting address, an origination address to begin this process. Physical inspection, never underestimate. So again, this is something we see a great deal more in marital law, where a computer was left behind and we're able to go ahead and look at that computer and find a wallet or cryptocurrency account. Email and digital forensic examination of electronic devices. So we did talk about our subpoena strategy here. We want to send We want to send subpoenas to the top 5 cryptocurrency exchanges. And if you have something you're working on and you want language, please reach out to me and we will get you some cryptocurrency exchange language to put in your subpoena. Wallet addresses, we need the wallet addresses and the transaction logs. So we want to get the transaction logs from the cryptocurrency exchanges as part of that subpoena request so we can see all transactions. That helps us as forensic accountants to see all the transactions, and then I could do a P&L, a profit and loss on the trading. Polling question number 5. Loan applications are a good place to find a list of assets and income. Yes. And credit reporting and unreported, undisclosed bank accounts as well. Searching the dark net. Use an anonymous networking surfing the dark net. We at RSA Risk Management and Investigations have darknet access, and we use tools such as the Onion Router Network. You might hear it referred to as Tor. The Invisible Internet Project, I2P, the Amnesic Incognito Live System, Tails, Freenet. I encourage you that if you want to do a darknet search, that you go ahead and you buy a separate computer, a laptop, which is not hooked up to your network and has a very, very strong firewall and security and cybersecurity system on it. We have a darknet specialist who works for us, who actually was a contractor to the NSA who has been doing these searches for many, many years and set RSA up on standalone computers, not connected to any use. And I actually have an interesting story on how one of these cases where the darknet worked for us. This was a marital law case where our client reported to us that her spouse was an attorney and had gone the last 3 years prior to the beginning of this divorce without having any clientele, without having any income from the law practice, only rental income and other forms of outside income. So showed absolutely no income from the legal practice and claimed that he pretty much shut down his legal practice. And his tax returns reflected that. And we decided to do a darknet search on this individual. Now, as many of you are aware, that there are hackers out there who will try and hack into a business. And once they hack into a business, they will try and gather knowledge, customers, records, business systems. They will then take it down and hold it hostage. When we did this dark web search, we were able to find the attorney's law practice system on the dark web. He had been hacked. So for the last 3 years prior to this, we were able to find all of his clients, all of the clients that he had onboarded and billed the previous 3 years. So this was something that was able to go to the negotiation table. All right. Government records. Government records can be a great source of information, whether you are looking for watercraft, aircraft, anything on a government website which allows you to do a search. And of course, for some government records, it might be necessary to file a FOIA request to obtain documents from the government. Certain things, even like teacher salaries, are maintained on government websites. So what are some of those things we could find? Licenses, trademarks, business ownership, driving records, court records, criminal records, registered representatives, especially in the area of securities, VINs and license plates, UCC filings, marriage records, divorce records, birth records, military records, government employee records, death records, voter registration. Polling question number 6, true or false? You can search the internet if you have a picture of the subject. So I'm sure all of you have said yes to this. You can upload a picture into Google, and if you look in the search bar, you can see like a little camera, and you click on that and you upload a picture, and that will come up with the individual and sometimes all of their social media posts if they've been tagged, their licenses, their LinkedIn profile. So that helps. So what are some of the red flags? The other side turns over statements. There are missing statements. We see overseas wires. We see some very large withdrawals. That's a red flag we want to follow up on. So account statement forensics. We certainly want to match all the deposits, source and applications of funds. We want to trace all the transfers. And when there is a subpoena or request for records, we want images of front and back on checks so we can see where checks are going to. real property detection as we go through bank statements and do our data detective work. We want to look for tax payments. We want to do an assessor search, and we want to look for deeds. Subpoena strategy, banks. We want all of the statements. We want fronts and backs of checks, wires, signature cards, new account applications, extremely important. Subpoena language. Again, what we ask for in the course of our investigation as we're doing this, we ask for way more, I think, than usually what we see in the field. But again, that's because we do want to see the front and back of checks. We want the signature account. We want the account applications. We want to see any other assets. So if you are looking to do a subpoena and you want some language, please don't hesitate to reach out to us. Interrogatories, asking if the person's ever owned cryptos. I think that's extremely important. Overseas accounts, third-party holders. Debtor examination strategy. I think the report that we put together with our trace data and our transfers and amounts, and the way we structure it in a very logical fashion really helps in a logical fashion of conducting a debtor examination. Okay, so in this, as I said, we prepare a report where we prepare the exhibits of all our findings, our transaction summaries, which could allow for a natural and logical sense of questioning on that. And with that, we have hit our time mark, and we can turn this over to questions.
There are several questions in the chat. Did you want me to go through them, or do you want to look at them and maybe start way out?
Okay.
Okay.
I see we have something from Michael Trazen. Hi, Michael. I've not seen you in a while. Nice to see you checking in. Yes, payments to creditors beyond that owed are fraudulent conveyances and recoverable. We do trace all of those. From Gail Schnitzer Eisenberg, how am I getting all this in the initial discovery or post-judgment proceedings? Only recently am I having trouble getting clients paid. So this is new. This is a process, and often we end up back in the litigation process in order to try and get everything we want. What document will enable me to obtain a debtor's income tax return from the IRS, and how long does it usually take to receive the requested information? From Mike Goldstein. Mike, we have to get him to sign a 2848, IRS 2848. If they sign that, then at RSA, we could go in with that into the CAF system and pull it up within 1 day. So anyone who is an enrolled agent of the IRS or a CPA and register with the IRS CAF system, once they've uploaded a form 2848, within 24 hours of review, they can pull down transcripts. Michael Trason is back. 26 USC 6103, hard to get. Yes, much of that is true. Robert Matanke, what creates value for cryptocurrency or NFTs? Perception. There is no value. There is no underlying asset. There is nothing more than perception. And that's why when we see a cryptocurrency collapse, we see it crash because it was only perception. Dogecoin was one that rose in value very, very quickly and crashed just as quickly. It is not a fiat currency. It's not backed by any government. It's just agreed upon by people who send and receive. So it's nothing more than perception at that time. Michael Trazan, there are serious penalties where activities constitute debt collection and are in violation of applicable law. Beware. Very true. We don't find hidden bank accounts. We don't find hidden credit card accounts. Everything must be used by a very outwardly process. There are forensic accountants, especially out of New York, who claim that they came from intelligence agencies and that they could find account numbers for you to then subpoena. Those are fruits of the poisonous tree and certainly nowhere to ever work with. Jonathan Lubin, piggybacking on what Michael Trazan said, is it ethical or legal to purchase illegally obtained information on the dark net? We purchase nothing. When you go on the dark net and you find this, this type of information is usually found on a board. So there are numerous boards and people who are darknet investigators will go on one of these boards and they will see what people have gathered. And this is for informational purposes only. We purchase nothing. And, strictly informational purposes only. Linda Jacobs, what is your typical retainer? I will give you the same line you heard in your first day of law school. That depends. So that being said, depending on the case, if we have an initial discussion and the universe of data, the corpus of data is very small, we'd start as $5,000. If we're looking at something that's more than $10 million and we're looking at a corpus of data of 30, 40 different bank accounts to begin with, and we know that we're going to have to convert that data and start going through thousands, if not millions of lines of data. We had one judgment where our case subject had 19 different bank accounts and over 10 million lines of data. So the size of that specific engagement, we asked for a $15,000 initial retainer. And of course, we had to go back and ask for more. So I hope that answers your question. Let's see, there's just such a cost-benefit analysis to put before the client before pursuing this sort of engagement. That's very, very true. If you're looking at a judgment that's under $200,000, then maybe doing something very, very limited scope with us, where maybe we get bank account statements you have, and then we put together a small listing of transfers in, transfers out, and leave it limited scope and not do the full data detective work on that. So we could leave something under $5,000, under $10,000, but really if it's under $200,000, we have to sit down and have a conversation about the number of accounts, and RSA will put together a hours budget of what we think it would take. And cost benefit analysis. There was one thing that I forgot to mention, and I think that very germane to this presentation is just last year, post-judgment recovery, we did analysis on bank accounts, and we found that our debtor, over a period of years, had gone to the bank and was purchasing checks, cashier's checks, and then hiding them in a safe. So we tallied up the cashier's checks and the amounts and dates and check numbers. So that was something we had never seen before, where reduced the amount of assets through the purchase of cashier's checks and try to show these as expenses, when in fact they were cashier's checks that he was holding to go ahead and cash at a later time. So something for you to look for when you're going through bank statements. All right, are there any more questions?
I think that's it. And I'd just like to thank you for a wonderful presentation. Oh, I'm sorry. There is one more question from Jeffrey Licker. This is regarding getting a signed IRS form.
Yes.
Here. So what would someone who's not a registered agent with the IRS do in order to get the form 4506T?
So again, to have immediate access to this, it has to go through the IRS CAF system. Now, I believe as an attorney, you could register for access to the CAF system. So to be registered in the CAF, you have to be qualified. So the people who work for RSA risk management and investigations are CPAs and enrolled agents. So they have access to the CAF system. So yes, 4506Ts, absolutely signed copies, uploaded, and they can usually be able to pull the information out the next day. And if for some reason there is a delay, what they can do is then they could, I know this is some old technology here, is they could send by facsimile, the 2848 to the IRS, and then call a live IRS agent on the phone. And then through that, there's an approval process, and they release the transcripts. So the hard copies of the tax returns are great. The hard copies, along with the transcripts, will tell the full story, and they will be authenticated. So I see a question from Jeffrey, the CAF system. That's the IRS electronic filing and access system that was probably antiquated in the year 2000 that they still utilize. So if you go to the IRS website, you should be able to find that. If you can't, send me an email, and I will have Ron Kreinbrook from my staff send you a link to see if you can get access to that. Again, if anyone has questions here, you want to run something by me, give me a call. You want to run something by me and maybe even ask for a strategy. It's not yet time to bring in a forensic accountant. Give me a call. I think that in this field of being a professional, we build relationships, we help each other. And if there really is a need, I think you'll call me back. So I want to thank you for giving me this platform, this opportunity today to put on a presentation. If we could ever be of any assistance, please feel free to reach out. And thank you again. And I wish all of you a wonderful day. Thank you.
Thank you, Stuart, very much. It was an excellent presentation. We appreciate it very much.
Thank you.